Stop trying to improve your trading psychology. Your willpower will eventually fail. Millionaire traders do not have better discipline than you, and they do not have some mystical monk-like control over their emotions. They just use systems that physically lock them out of their own accounts. The biggest misconception in retail trading is that the top 1% possess a superhuman mental strength that you simply lack. You watch them on screens, calm and collected, and you think there is something fundamentally wrong with your brain. You think you are weak. You are not weak. You are just fighting a war with a stick, while the other side has air support. If you put a professional trader in front of a raw, unfiltered price chart after 3 consecutive losses, with absolutely zero structural rules in place, they will feel the exact same urge to revenge trade as you do. They will feel the heat in their chest. They will feel the desperate, clawing need to make the money back immediately. Willpower is a finite resource. It operates like a battery. You wake up at 6 in the morning, you drink your water, you look at your trading plan, and your battery is at 100%. You are a rational, intelligent adult. Then you sit down. You watch a setup fail. You watch the market slip sideways for 3 hours. You read a news headline that contradicts your bias. Your battery drains. By 2 in the afternoon, your willpower is entirely gone. You are exhausted, frustrated, and operating purely on primitive emotion. You end up gambling your rent money on a 1-minute gold chart because a moving average crossed. It is a very confident mistake. The financial system is rigged to make you do exactly this. Brokerages want you clicking. The more you click, the more spread they collect, the more commission they make. The interface is designed to make execution frictionless. You are a rational actor trapped inside a culturally overwhelming, hyper-optimized casino designed to drain your account. The professionals know this. They know they cannot trust their own emotions. So, they shift from relying on willpower to relying on architecture. They build 4 specific walls around themselves to make overtrading physically impossible. The first wall is elevating the time frame. The fastest way to overtrade is by staring at the wrong clock. Most retail traders spend their days hanging out on the 1-minute, 5-minute, or 15-minute charts. They do this because they believe a very simple, very flawed piece of logic. They think that more setups equal more money. If the 5-minute chart prints 10 setups a day, and the daily chart prints 1 setup a week, the amateur brain calculates that the 5-minute chart is where the wealth is generated. But lower timeframes are a chaotic wasteland. They are filled with market noise, algorithmic traps, and phantom setups that exist purely to trigger your boredom. When you watch a 1-minute chart, you are watching the heart rate of a hummingbird on espresso. The price violently thrashes up and down. Red candles plunge, green candles spike. Your brain interprets this rapid movement as urgency. It feels like you are missing out on something massive every 60 seconds. So you click, you buy, you sell. You flip your bias 3 times in 10 minutes. The market barely moves 10 pips in reality, but in your mind, you just fought a war. You must force yourself up to the 4-hour or the daily time frames. When you elevate the time frame, something deeply uncomfortable happens. The chart stops moving. It just sits there. A 4-hour candle takes 4 agonizing hours to close. You are forced to wait. You will sit at your desk for an entire Tuesday and absolutely nothing will happen. Your brain will scream for dopamine. It will beg you to drop down to the 5-minute chart just to feel something. You must refuse. When you zoom out, the sheer frequency of potential setups plummets. You go from seeing 20 trades a day to maybe 2 trades a week. This naturally throttles your trade frequency. It forces extreme patience. It filters out the noise. The moves on a higher time frame actually mean something. They carry weight. Institutional money operates on these higher time frames. By aligning yourself with a slower clock, you eliminate the frantic, impulsive clicks born from sheer boredom. The chart moves slower. You breathe slower. You breathe slower. And I know exactly how slow they breathe, because I used to monitor their servers. When I worked as a prop firm data analyst, I had raw, unrestricted access to the back end. I analyzed the exact mathematical difference between the 1% who secure huge payouts and the 99% who blow their accounts by Tuesday. I put all that classified data into a new book. It gives you 3 massive advantages. First, the actual server data. I reveal the exact trade duration, daily loss limits, win rates, and profit factors of the top 4,000 traders. It is just raw truth. Second, you get step-by-step mechanical control strategies to physically force patience and kill overtrading. And third, A survival guide mapping out the exact mindset shifts required to survive a drawdown without gambling your rent money. It is time to mechanize your mind and take what is yours. Grab your copy through the link in the description. The second wall is the fundamental and technical lock and key method. A perfect technical setup is a trap if it does not have an engine. Most traders think the key to financial freedom is memorizing geometric shapes on a screen. They wait for a double bottom at a support zone. They see a head and shoulders pattern. The textbook they bought on the internet says this pattern means the price goes up. So they risk 2% of their account. The price instantly goes down. Hard. They did not do anything wrong technically. The pattern was beautiful. They just bought a currency when its central bank was actively trying to destroy its value. Trading on technicals alone leaves you incredibly vulnerable to fake-outs. It makes you a victim to the larger macroeconomic tide. And when you trade purely on shapes, you will find those shapes everywhere. If you stare at a chart long enough, your brain will hallucinate a valid setup. You will see triangles that do not exist. This leads directly to rapid-fire overtrading. Millionaires use a lock and key. The technical chart is the lock. The fundamental data is the key. You must attach a strict macroeconomic checklist to your technicals. If the chart says buy, you must look at the news. You must look at the interest rates, the inflation data, the labor market. If the fundamental data does not offer a specific, aggressive catalyst for that currency to gain strength, the trade is completely void. It does not matter how beautiful the double bottom looks. If there is no fundamental engine to push the car is not going anywhere. Adding this mandatory checklist acts as a massive filter. It requires you to do research before you click. It adds healthy friction. By demanding that the narrative matches the chart, you dramatically slash the number of impulse trades you take per week. You stop trading the noise. You start trading the reason. The third wall is the mobile device ban. The most profitable trade you can take today is deleting your broker from your phone. Having your trading account on your smartphone feels like the ultimate freedom. The marketing tells you that you can trade from a beach. You can trade from a mountain. You can trade while living your best life. It is convenient. It is easy. That ease is exactly what will destroy you. Your smartphone is not a neutral piece of technology. It was designed by thousands of engineers whose sole purpose is to hijack your dopamine receptors and make you stare at the glass until you die. It is an anxiety machine. In trading, accessibility breeds impulsivity. Putting a financial terminal on a device designed for addiction is like asking a gambling addict to carry a slot machine in their pocket. Because it is so easy to open the app, you do it constantly. You open it in the grocery store line. You open it at a red light. You open it in bed at 2 in the morning. You check a position. You see it is slightly in the red. You panic, and you close it early. Or worse, you wake up, look at the screen through squinted eyes, see a massive green candle, and you buy at the absolute top of the market just before you brush your teeth. You must introduce the mobile device ban, log your account off your phone completely, erase the app, change the password and leave it written on a piece of paper on your desk. In the business of trading, friction is a massive competitive advantage. If you want to risk your hard-earned money, you should at least have to walk to a physical desk, sit in a chair, and turn on a computer to do it. Make execution hard. If you have to boot up a laptop to take a trade, you give your logical brain a 5-minute head start to catch up with your emotional brain. The urge to revenge trade often dies in the time it takes for a computer to turn on. But what happens when you are at your desk? You are sitting in the chair, the phone is in another room, you are on the 4-hour chart. You have checked the fundamentals, you take a perfectly valid trade, and it loses. Then you take another, it loses. Suddenly the heat rises in your chest, the logic evaporates, you want your money back. You are human, and the animal part of your brain is now driving the car. This brings us to the fourth and most critical wall, outsourcing your discipline to a digital straitjacket. Professional manual traders do not rely on promises they make to themselves in the mirror. They use terminal utilities. They use algorithmic risk managers like the Alpha Equity Manager for MetaTrader 5. This tool does not trade for you. It does not look for patterns. It does not predict the future. It simply sits in the background and violently polices your behavior. It is a structural barrier between your money and your own temporary insanity. We have all been in the drawdown phase. You take a loss. You get angry. You widen your stop loss because you are absolutely certain the price will turn around. It does not turn around. So you double your lot size on the next trade to make the money back faster. You blow the account in 15 minutes. Afterward, you stare at the screen in silence. You beat yourself up. You read another psychology book. You do not need another book. You need the anti-cheat vault. When traders get tilted, the very first thing they do is widen their risk parameters. Alpha Equity Manager prevents this through a time-locked vault system. When you are calm, before the trading week begins, you set your maximum daily drawdown and your maximum lot sizes. Then, you set an unlock window. You tell the software that it is only allowed to accept changes to the settings between 11 at night and midnight. If it is 2 in the afternoon and you are losing, and you try to open the settings to increase your risk, the software ignores you. It instantly reverts the settings back to their locked state. You can scream at the monitor, you can restart the terminal, you can change charts. It does not matter. The vault survives. You physically cannot cheat your own rules. You are a prisoner to your own past logic. The software protects you from the person you become when you are losing. It also blocks overtrading at the source. The native MetaTrader platform gives you a tiny, incredibly dangerous one-click trading panel on the chart. One click, and you are in the market. That button is a loaded weapon sitting on a coffee table. Alpha Equity Manager automatically hides that default panel. It forces you to route all your execution through its own interactive command center. This introduces mandatory friction. Instead of just clicking buy, you must use a pre-trade calculator. You must type in your lot size and your stop loss. The software then shows you the exact, brutal monetary risk you are about to take. It forces you to look at the dollar amount before execution. If you try to open a trade that violates your defined maximum lot size, the software blocks it. If you set a rule that you are only allowed 2 concurrent open positions, and you try to open a third because you are bored, the software detects the violation. It instantly and automatically closes the newest illegal position. It forces compliance. Then, there are the daily lockouts. You define a maximum allowed daily floating loss based on your account size. Let us say it is 2%. You take a bad trade, you take another, your floating loss hits exactly 2%. Instantly, without asking for your permission, the software closes all your open positions. It flattens the account. And then, it disables the buy and sell buttons for the remainder of the day. You can sit at your desk, you can analyze the charts, you can beg the market for one more chance. The terminal is dead to you until tomorrow. The revenge trading cycle is broken mechanically. But losing is only half the problem. Winning causes just as much overtrading as losing. We associate blown accounts with anger and revenge, but euphoric overtrading is equally fatal. You hit a massive win on a Tuesday morning. You make your entire weekly goal in 2 hours. You feel like a genius. You feel like the market is finally making sense. Your ego expands. You decide to take just one more trade, a small one, just to see what happens. That small trade goes into drawdown. Your ego refuses to take a loss on a green day. You add to the losing position. By 3 in the afternoon, you have given back every single dollar of profit, plus some of your principal balance. Euphoria is just greed wearing a nice suit. The software stops this too. You set a daily profit target percentage. When your floating profit hits that exact number, the software acts exactly as it does for a loss. It instantly closes all positions. It secures the funds. It disables the execution buttons until the next daily reset. It locks you out. It forces you to walk away with your money. It protects your profits from your own arrogant belief that you can never lose. Even when you are trading within your limits, you are still prone to lazy mistakes. You enter a trade manually, and you tell yourself you will place the stop loss in just a minute. You just want to see how the price reacts first. The phone rings. You look away. A news headline drops. The price violently gaps against you, and because you had no stop loss, you are ruined. The human brain loves to procrastinate risk management. The software does not. It utilizes a stop-loss police feature. You toggle the enforcer on, and you give yourself a grace period in seconds. Let us say 30 seconds. You execute a market buy. The timer starts. You have exactly 30 seconds to manually attach a stop-loss to that trade. If the timer reaches 0 and the software does not detect a hard stop-loss on the server, it automatically closes your unprotected position. No warnings. No second chances. It teaches you discipline through immediate financial consequence. It also manages risk while you are in the trade. Trailing a stop-loss manually is deeply emotional. You move it too soon, and you get stopped out before the real move. You move it too late, and a winning trade turns into a losing trade. The software removes the emotion through a smart reduction system. You tell the utility that when the price travels 50% of the way to your take-profit target, it must automatically move your stop-loss 20% closer to your entry. The moment the price crosses that invisible trigger line, the math executes. Your capital risk is reduced instantly. You do not have to touch the mouse. You do not have to debate the decision. The rule is executed in the background. Finally, there is the fundamental noise. You know you are not supposed to trade during major economic announcements. You know that when the consumer price index data is released, the spread widens, slippage is horrific, and the chart moves in completely irrational directions. It is gambling. But you are sitting at your desk 5 minutes before the data release, and you feel the urge to guess. You want to flip a coin. Alpha Equity Manager acts as a news guardian. It has a native high-impact economic calendar filter built in. You define a restricted time window, perhaps 10 minutes before and 10 minutes after a high-impact event. The moment that window opens, the software completely disables the execution panel. The buttons go gray. You cannot open a new position. If you set it to do so, it will even automatically close all your active positions immediately before the news window begins. You are forced to sit quietly and watch the chaos from the sidelines, with your capital completely protected. Stop fighting your brain. You expect that one day you will simply wake up with the perfect mindset. You believe that if you just read enough quotes on the internet, or watch enough motivational videos, you will never make a mistake again. You think you will become a machine. That day will never come. You will always be human. You will always feel fear. You will always feel greed. You will always want to make the money back. The goal of a professional is not to eradicate human emotion. That is biologically impossible. The goal is to build an environment where your human emotions are rendered completely powerless. By zooming out to the higher time frames, you starve the brain of constant frantic stimuli. You slow the game down. By requiring a fundamental lock and key, you force yourself to justify every action with hard, macroeconomic reality. By deleting the trading app off your mobile device, you strip away the convenience of impulsive destruction. And by letting a strict algorithmic utility police your execution, you fire yourself from the job of risk manager. Discipline is not about staring at a button, sweating, grinding your teeth, and trying really hard not to click it. Discipline is building a system where the button is completely disabled when you shouldn't be touching it. Go outside, look at a tree. The terminal will be there tomorrow.